So good afternoon, everyone. Welcome to Maib's first quarter 2025 financial results. This presentation today, I am joined by Giorgi Shagidze, Maib CEO. He will join in a second. Makar Stoyanov, the CFO of the bank. And my name is Evgeny Risovich. I represent Investor Relations. Together, we'll discuss our key financial results and answer your questions. At the end of the call, you can write them down in the chat. You can raise your hand and we will give you an opportunity to speak, and you can email them to my email address. Okay, before we begin, I wanted to to draw your attention to our forward-looking statements disclaimer. Our presentation today contains statements about expectations, forecasts, and other projections that are subject to risks and uncertainties, which could mean that the results will differ from these projections. We outline several potential risks here, including macroeconomic, regulatory factors, market risks, operational challenges. So we caution you not to rely on these projections when making investment decisions. All presented results are based on unaudited financial data prepared in accordance with IFRS, and these results are consolidated. I will now pass to Giorgi Shagidze, our CEO, to summarize the performance.
Yeah, thanks, Evgeny, and good afternoon, everyone, and thanks for being with us today. If we start with the summary from a macro perspective, I think last year the GDP growth was impacted negatively with the agro output, and therefore it was about still positive, but 0.1%. With the global developments on the macro front, this year GDP growth has been revised down to 0.6%. However, 2026 growth is still set at 2.5%. But let's see how it develops. In terms of inflation, we saw 7% in December, 8.8% in March 2025. However, given where the prices are today in the world, we are already seeing the inflation decline starting from today. In terms of our strategy, we have continued to strengthen our position across our digital and other market presence. We are about 809,000 with 809,000 mobile banking users, 1.4 million cards, with 81% and 76% of online deposits and online loans granted through our mobile banking. We continued strong performance on our bottom line. In quarter one, our return on equity was 19.6%, with the return on asset on 2.6%. Asset growth in quarter one was 11%, and year-on-year loan growth was 33.6%. We will explain more on each of these on the following slides. Evgeny?
Thank you, Giorgi. Just to give you the summary of the presentation, I will now go through the macroeconomic highlights, then back to Giorgi for bank's overview, performance, and strategy, and Makar will tell us about the financial performance in high detail. To start off, once again, GDP growth for 2024 was 0.1% below expectations. An average of forecast for 2025 tells us that the economy will grow by 1.5% in 2025. On this slide, we have 2.0% as predicted by the Ministry of Economy, who has yet to update their forecasts. GDP estimates for 2025 and 26 have been lowered worldwide following the trade tensions that began in April when U.S. has introduced tariffs on all its trading partners. Although Moldova's trade with the US is only 2.5% of its total exports, the country is still affected because it is a very open economy. The IMF, for example, revised its forecast down by 2.4% to 0.6% for 2025. World Bank updated its forecast to 0.9% growth in 2025. Against the backdrop of higher energy prices at the end of 2024, inflation picked up in the last quarter of 2024 and the first quarter of 2025. As of March, it reached 8.8%, peaking at 9.1% in January. As Georgi has mentioned, due to these trade tensions, we already see, starting with mid-April, a lowering of global commodity prices, which tell us that the inflation outlook is pointing downwards. So the latest inflation forecast from the National Bank of Moldova was at the end of February, and we now await more statements from them going forward. National Bank of Moldova has capped the interest rate at 6.5%. This is the number that was reached in March. Since the beginning of the year, in response to this increase in inflation driven by energy costs, the National Bank has increased interest rate to 6.5% from 3.6%, which was prevalent in the second half of last year. Now, to the next slide. Since in 2025, Moldova has switched to the euro as its reference currency, in which it estimates its reserves. Reserves in US dollar denomination remained largely flat. Reserves in euro have fallen mostly to the fact that the dollar has weakened. They now stand at 5.1 billion euro and 5.5 USD billion. Reserves for Moldova remained quite strong. We estimate they are about 7 months of imports, which is higher than the peer group, indicating strengths of the currency and stability. So net exports in services continue to grow in 2024, mainly driven by the sustained strong performance of the IT sector. A negative net export in goods on the back of a very weak agricultural season has offset that growth in the big picture of Moldovan trade. However, as per Ministry of Economy, trade is expected to resuscitate in 2025, mainly because of that agricultural recovery. Agriculture, just to remind you, agricultural goods make up just under 50% of Moldova's goods exports. And by the way, as goods exports have fallen while service exports have grown, Moldova now almost half of Moldovan exports are service exports. So, and if this strong performance in IT exports will continue, service exports will overtake goods exports in the near future. Also, to mention that the budget deficit has fallen to 3.9 at the end of 2024. Now, to go back to that downgrade that Georgi has mentioned before. So it wasn't just Moldova that was downgraded. IMF downgraded global economic outlook because of these trade tensions. Previously, Moldovan outlook for 2025 was 3%. It was downgraded to 0.6%. And there are several potential external shocks that IMF has looked at, which the U.S. tariffs are not one of them because Moldovan exports to the U.S. are quite small. However, potentially there's an impact on remittances that make up just under $2 billion in Moldova. There are also potential declines in further declines in trade of goods. So these factors weigh heavily on both external demand and domestic confidence. That's why we saw such a sharp downgrade for 2025. 2026 forecast remained quite strong, close to 3% for both IMF and the World Bank. So despite current headwinds, one of the things that remained a positive constant was the EU support, and the package of $1.9 billion from the EU over the 3 years, 2025, 26, and 27, has been confirmed and is likely to help the country and the economy. Another important thing to mention here is that election is now set at the end of September, parliamentary election for Moldova. I will turn back to Georgi to talk about bank's performance and strategy.
Thanks, Evgeny. Little bit of a recap about MAIP at a glance, how we are positioned. We are by far the largest and the most technologically advanced bank in Moldova, with the market share of 36.4% in terms of total assets and 37.9% in terms of total loans. Our key numbers are net profit from about 20.7 million in Q1, with the mobile app users of 809,000 and total number of customers 1.1 million. We'll speak about these dates, about these numbers more. If we move on to the next page. So this is our strategy. We basically continue putting the customer at the center of everything we do, to ensure that we do everything possible to meet its rapidly changing expectations. We put much emphasis on digitalization, and we have the numbers to show to you, as well as to payments. And clearly, we continue to change the experience of people in our branches. In parallel, we are exploring our international expansion ideas to do an asset-light, digital-only offering in Romania, focused on Moldovan diaspora firstly, and then a broader consumer market. We have submitted for the respective greenfield license. There will be long-term process, which we are ready to follow. If we move on to the next page, that summarizes our Q1 achievements. Firstly, we have updated or refreshed our purpose and vision for the bank, where we basically now our purpose is to find opportunities for people and businesses to thrive, and this has been started to be well implemented across all 2,600 people that work for MAIP. In Q1, we received another very encouraging regional award. We were named by Global Finance as most innovative bank in Central and Eastern Europe, and then innovation was in bank assurance product, which has been, we are quite proud to have this regional award and recognitions, and especially for the products and the offerings where we again put the customers at the center. We continue to issue our local corporate bonds, and Q1 we continue doing it, and then we signed two very interesting sponsorship locally, one related to Moldova Football Federation, and the other one related to the National Theatre after Mihai Eminescu. If we move on to the next page, that page summarizes our achievement in our digital efforts. Again, 76% of our loans and 81% of our deposits are granted through mobile banking, with the daily active users as a percentage of monthly active users being at 38% and monthly active users being at 68% of our total users. These numbers are quite strong, and then they are also improving step by step. If we move on to the next page, that summarizes our performance, and Makar will continue in detail. Our net profit for the quarter grew 26.6% quarter-over-quarter, or 15% year-on-year, reaching about 402 million lei. In terms of return on equity, we were at 19.6% at the consolidated level. Our net interest margin slightly increased by 0.4% quarter-over-quarter. This is aligned broadly with the increased base rate and interest rate environment in the country. Our cost to income for year-on-year decreased to 54%, and then quarter-over-quarter increase is just seasonal, and all this happened in the very strong liquidity and capital adequacy ratios, which stood at 244% and 19.9% respectively. Makar, please.
Yeah, thank you. Indeed, we had another successful quarter, and let me elaborate a bit on the drivers and the business logic behind what stands behind this consistent, healthy growth. If you look on the loan portfolio, we continued upward trend, and we have currently 32.6 billion lei, the overall loan book, which increased over 7% quarter-on-quarter and over 33% year-on-year. Now, last quarter, all businesses have increased their portfolio sustainably. We see that the biggest growth comes from retail, especially from mortgage business, while the corporate and business banking increased by around 5-6%, consistent kind of with the quarterly expectation and with our targets and budget. If you look on the deposit side, we also see a consistent upward trend. We increased by around 5.4% on quarterly basis and over 12% on yearly basis. Important to mention that in Q1 of the current year, we also had important increase of deposits of one of our important corporate clients. But even if we take out that money, we still see consistent, sustainable growth of portfolio, especially on the retail side, which gives us insurance of the kind of stable long-term funding. Now, if you look on the next slide, you will see that as a bottom line, as already was mentioned by Giorgi, we saw and we experienced quarter-by-quarter increase of the net profits coming both from interest income, we'll see later, and non-interest income part. We have a strong improvement quarterly basis. In Q4, we had 317 million local currency lei. Currently, we had over 400 million net profit. It's also around 15% increase versus a year ago, so it shows kind of the stable growth. ROE-wise, the trend is upward. It's around 19.6%. And pre-provision even 23.3%, and ROA is also increased to 2.6% and stable versus previous year. Sorry. If you go to the next slide, you will see the drivers of this sustainable, healthy growth. On net interest income, we increased by over 23% year on year and over close to over 12% on quarterly basis. And that comes from both from increase of the portfolio of loans, which we have seen before, around 7% on quarterly basis, but also of the margins, net interest margins, 0.4% up, given the higher interest rate environment and a bit higher inflation environment. While we also ensure the sustainable cost of funding in the current quarter. If you look on the yield side, kind of the investment side, loans and securities, loans, we saw a slight decrease, and that's kind of in line with the trend of the overall yield of portfolio in Q1, but because the pricing happens a bit later. But if you look on the security, we already saw in Q1 2025 upward trend. Of course, kind of that comes much quicker on the security side, repricing and the kind of movement with the interest rates than on the loans. If you go to the next slide, and you'll see here non-interest income, that's also saw stable growth. If we compare the last quarter, of course, there is a seasonality because you see the net foreign exchanges was around close to 200 million. There is seasonality. But if we compare with the previous year-on-year basis, we see structured good growth of non-interest income coming from both from FX, Forex, and from net fees and commissions portfolio. Important in Q1, we also saw one of important assets which we have had our previous headquarter, which also had impact on the non-interest income. But even if we take that out and we take out seasonality and normalize our performance, year on year, we see increase in performance of non-interest income. If you go to the next slide, if you look on the operational part, operational expenses part, we have some upward trend around 13% quarter on quarter and 24% year on year. If you take quarter on quarter, it's mainly impacted by a resolution fund, which we pay at the beginning of the year. But if you compare with the previous year, the main drivers were we kind of updated the salary expenses, so in line with the inflation, and also increased our OPEX in line with inflation. So there is also a bit of seasonality, but in line with inflation, not more, even less. Cost-income ratio, given seasonality, quarter on quarter slightly deteriorated by 1.7 percentage point. But if you look on the year-on-year basis, we even improved it by 0.8 percentage point. On the next slide, you will see the quality side. Our cost of risk has improved to 0.3% and also NPL ratio. If you talk about the cost of risk, the important factor was recovery of one of the corporate client of corporate recovery. And as a result, we saw 0.3% cost of risk. While we also see important slight improvements on the NPLs across business lines, for instance, retail, corporate, of course. And as a result, we see 1.5% NPL ratio in Q1. All this in the context of strong, even improving NPL coverage ratio, which is close to 250%, and that's cash coverage. And all this, if you next slide. All this happens in the context of the strong the capital adequacy ratio and liquidity. If you look on the capital adequacy ratio, it slightly went down, but again, significantly above the minimum requirements. Overall capital adequacy ratio is 19.9%. The decrease by 0.7 percentage points is driven by two factors. From one side, the strong growth around 7% of the assets of the loans, I mean, the loan sides of the assets, that's kind of one driver. And secondly, there were some increase on the prudential differences between prudential NPL and the IFRS NPL. But that's in line with kind of the evolution of portfolio. And if you look on the ERBA density, is also around 52.6%. Our LCR is over 240%, significantly above the minimum requirements of 100%. So in summary, another successful quarter with a strong performance driven by both interest and non-interest income, keeping operational expenses in control and adjusting at the maximum inflation while ensuring the stable, liquid, well-capitalized organization.
Thank you, Makar. We have 2 questions over email. And by the way, I encourage you to ask questions on chat or raise your hand, and we will give you opportunity to speak. Well, before we do that, we have a questions on NIM. Seeing that it increased significantly, what is the outlook for the end of the year?
Makar, do you want to answer?
Yeah. So indeed, we've seen the NIM. We expect some upward trend, slight upward trend in the coming period, but not significant, then stabilization, because the speed of the repricing on the asset liability sides a bit differs. So we'll see, of course, some upward trend also on the cost of funds or cost of deposits. But the NIM, net interest margins, it will be, we don't expect significant differences versus the current number. Given just what I said, because we see, and you saw already in the slide with the yields on the loans and yields on securities, that usually loans are being kind of a bit repriced, or assets a bit repriced earlier than liabilities.
Thanks, Makar. And the question is on the dividends. When are you going to announce the dividend for 2024?
So we have submitted the requirement to the National Bank and have already disclosed the date for the shareholder meeting, which will be which will be on 19th of June. Maybe end of this month we will be able to send the more accurate numbers.
Okay, thank you. There's no more questions and no questions on the chat. So thank you, MAIB team, and thanks the audience for tuning in to our results. Bye-bye.
Thank you, everyone.